A very good day. I bid to Dr. Zanani Binti Abdullah. Today, I would like to present my individual assignment about financial statement analysis. Without further delay, I would like to introduce myself. I am Edwinius Edmund Anasabili with student metric number S54977. Before I start, I would like to introduce my company. I was searching for two companies in Bursa Malaysia, and I choose plantation industry to be analysis. And I choose Samdabi Plantation Berhad and Sarawak Oil Palm Berhad. And I choose annual report 2020 as it closed their account every 31st December 2020. So in financial analysis, in financial statement analysis, there's a three financial ratio, which is liquidity ratio, profitability ratio, and solvency ratio. So I choose profitability ratio to be analyzed. So in profitability ratio, it consists profit margin ratio, assets turnover, return on asset, return on equity, earning per share, price earning ratio, and payout ratio. So firstly, we look for profit margin ratio. So this is profit margin ratio for the both company that I choose, Samdabi Plantation and Sarawak Oil Palm. So what is profit before that? What is profitability ratio? Profitability ratio refer to measure the profit or operating performance of an entity over given period. So this is a formula for profit margin ratio. So revenue divided by profit for the financial year, it will be profit margin ratio. According to the table above, the profit margin ratio for Samdabi Plantation Berhad is 0.10, and it shows us that for every RM invested by ordinary shareholders of Samdabi Plantations, the company made 10-cent profit. Besides, our Palm Berhad earned the profit 7 cents with RM investment by ordinary shareholder of Sarawak Oil Palm. Therefore, the profit margin ratio for Samdarbi Plantation Berhad is higher than Sarawak Oil Palm Berhad, since which is 10 cent and 7 cent respectively. So Samdarbi Plantation Berhad is better for making investment than Sarawak Oil Palm Berhad. So next we will look for asset turnover. Okay, this is an asset turnover for the both company. What is asset turnover ratio? It measures the value of a company's sales or revenues relative to the value of its asset. So this is the formula. So asset turnover. Okay, this is a formula of asset turnover, revenue divided by average total asset. So how to find average total asset? We must do sum up total asset 2019 plus total asset 2020 divided by 2. So according to this table, the asset turnover for Sarawak Oil Palm Berhad is 1.06, higher than Samdabi Plantation, which is 0.46. This shows us that Sarawak Oil Palm is more efficient at generating revenue from its asset. Besides, it is indicate that Sarawak Oil Palm Berhad are performing well. Therefore, Sarawak Oil Palm Berhad is the best company to make investments, since the asset turnover is higher than Samdabi. Okay. Next, we will look for return on asset. Okay, return on asset. So this is the return on asset. Return on asset measures the overall effectiveness of management in generating profit with its available assets. So return on asset, or ROA. So this is the formula, net income divided by average total asset. So how to find average total asset? Total asset 2019 plus total asset 2020 divided by 2. So you will get the average total asset. So according to this table again, the ROA for Samdabi is 0.048, lower than the Sarawak Oil Palm Berhad, which is 0.052. Okay, this shows us that Sarawak Oil Palm Berhad is more efficient using their asset to generate the profits. Besides, Sarawak Oil Palm Berhad shows that how effective the company is in converting the money it invest into net income. Therefore, the higher the return on asset indicate the company is earning more money on less investment. Okay, we will look return on equity. Next, we move to return on equity. So this is the return on equity for the both company. Okay, ROE. Okay, this is formula of ROE, net income divided by average total equity. So how to find the average total equity? Total equity 2019 plus total equity 2020 divided by 2. So we will get average total equity. Okay, the return on equity measure the return earned on the common stockholder investment in the firm. Okay, according to the table above, the ROE for Sarawak Oil Palm Berhad is better than Samdapi Plantation because the shareholder earned from the equity is higher. Okay, the ROE for Samdabi is 0.084 lower than Sarawak Oil Palm Berhad, which is 0.091. Okay, this is shows us that the higher ROE of Sarawak Oil Palm Berhad due to the higher number of net income. Therefore, Sarawak Oil Palm Berhad is good for investment because the ordinary shareholders can get a higher return rather than Samdabi Plantation Berhad. Okay, next we move to the earning per share. Okay. Yeah, so this is the earning per share for the both company, Samdabi Plantation and Sarawak Oil Palm. So what is the EPS? EPS is a company net profit divided by the number of common stock, common share it has outstanding. So EPS, how to get it? We profit for the financial year divided by weighted average number of share. So according to the table above, EPS for Sarawak Oil Palm Berhad is 35.75, higher than Samdapi, which is 19.56. This is indicate how much money a Sarawak Oil Palm Berhad make for a share of its stock. Besides, the higher EPS indicate greater value because investor will pay more for a company's share if they think the company has higher profit relative to its share price. Therefore, Sarawak Oil Palm is the best company for investor to invest and they can get return from the investment higher. Okay. Next, we move to the price earning ratio. Okay, so this is the price earning ratio, PE ratio. So how to get a PE ratio? Share price divided by EPS. So the price to earning ratio, PE, is the ratio for valuing a company that measure its current share price relative to its per share earning EPS. According to the table above, the PE ratio for Samdabi Plantation Berhad is 0.26 higher than Sarawak Oil Palm Berhad, which is 0.07. Samdabi Plantation Berhad stock is overvalued than Sarawak Oil Palm Berhad. Besides, the Samdabi investors are expecting high growth rate in the future. Therefore, the PE ratio shows what the market is willing to pay today for stock based on its past or future earning. Thus, Samdabi Plantation Berhad stock price is high relative to earning and overvalue. So lastly, payout ratio. Okay, so this is a payout ratio for the both companies, Samdabi Plantation Berhad and Sarawak Oil Palm Berhad. So how to get a payout ratio, dividend divided by profit for the financial year. So according to the table above, the payout ratio for Samdabi Plantation Berhad is 0.27. This result indicate that every 1 ringgit profit made by Samdabi Plantation Berhad, it paid 22 cents of dividend to shareholders. Besides, Sarawak Oil Palm Berhad indicate that payout ratio is 0.12. This shows us that every 1 ringgit profit, it will be paid 12 cents of dividend shareholders. This is because a payout ratio indicates the allocation of distributions of company profit as dividend. Therefore, the payout ratio for Samdabi Plantations Berhad 0.27 is higher than Sarawak Oil Palm Berhad, which is 0.1212. Thus, Samdabi Plantation is better company for investment rather than Sarawak Oil Palm. So this is a 7 ratio analysis that I choose. Okay, so that's all for me. Thank you.